What's up, everyone? Today is going to be a trade review for Thursday, July 17th, 2025. And this is what I saw going into the market today. This is my full analysis, and yeah, let's get into it. So, starting off, I always go to the 4-hour or some larger time frame. You can do daily if you want, but the daily for me, if we look, it's just been consolidation. So I'm really going to be zoomed in more to see more structure. And that's going to be our 4 hours. So the first thing I noticed going into the morning is this divergence between NQ, which I trade, and ES. ES took this low on the 4 hour, while NQ didn't take the low, and that implies that NQ is going to be the stronger asset that we want to trade on. So with this in mind, my bias already is going to be bullish. We have this external buy side liquidity, which is BSL. So if you're wondering what that means, there you go. And that's going to be my bigger time frame target. So I know I want buy side to get hit, and that's what I gathered from the 4 hour. If you go to the 1 hour chart, again, we progressively zoom in to get more granular, get more details. We have Asia session lows from the overnight session. I don't really expect these to get hit though. We could manipulate them potentially, but I don't expect them to get hit because we have this 1 hour displacement or fair value gap created pre-market. So if we're really bullish, we should retest this displacement, but we should hold it to continue going long. If price wants to play around and chop around in this range, do I really want to trade it? No. And that means my draw isn't as clear as it needs to be to take a trade, and price isn't moving efficiently enough for that trade to be worth it. So I really want to see this hold. I don't want to see us chop around in this 1 hour gap. I don't want to see us, if we just whipped Asia and manipulated it, it would be different. But we've had a lot of choppy days recently. I don't want to sit around and chop. So I want to see us wick into it and then displace. And that's exactly what we got, thankfully. So going into open, right? So 9 o'clock hits. As we're going into 9:30 open, we start to see price pull back after taking this internal high. And what catches my eye here is we have these relatively equal lows. They're kind of stacked equal lows, but they're about the same price. So we'll call them relatively equal lows. And we want to see these get taken. They're usually a really strong draw because you have a lot of people who ended up longing off of this 1 hour gap. And maybe they took profits, maybe they didn't, maybe they took partials, but their stop orders are still resting down here. So when you have a bunch of sitting orders, price usually likes to come back and fill those orders. And a spot that people, if they're going long, they're probably placing their stop orders below these swing points. So you have a bunch of resting orders down here. NQ comes and sweeps all these orders. It sweeps all these lows. ES doesn't. So ES on the micro, on the zoomed in perspective, ES is actually looking stronger. It doesn't move as efficiently because on a larger time frame, it's still farther from my larger time frame target, the external buy side. It's chugging on up right now, but it still has a little bit of a ways to go versus NQ took it. So on the larger time frame, NQ is more bullish. On the smaller time frame, ES is saying, hey, we're still bullish, we're diverging. However, internally is looking a little stronger. Regardless, bullish divergence on the higher time frame and the lower one. So NQ takes these lows internally. ES doesn't take the lows though. So look, these equal lows down here. See these right here? These lows are these lows. These lows never get hit on ES. You see they're still intact. The wick came down here, but it didn't come all the way down here. These lows are still intact on ES, but they got manipulated, swept below on NQ. So NQ comes down, ES doesn't come down. So right here we have another divergence. Oh, I drew that wrong. One sec. Another divergence. You see that? Boom versus boom. So two divergences into a larger time frame imbalance or fair value gap. So everything's saying bullish, but what do I need for my entry? And this is where we drop to the 1 minute. This would have been the optimal A++ entry, but I didn't end up getting it because price just moved a little too fast for me. And I was on the 5 minute looking at this. The 5 minute we have a bearish gap, and optimally I would prefer if there wasn't this here, and I'd like to see it get closed above because higher time frames hold more power, they're more significant, and so I want to see it get invalidated before I go long. However, one thing that I forgot to mention and keep in mind in this case was that the way my strategy works is on the last manipulation leg down, the first gap to get inverted that was created within the manipulation leg. So the first gap in this case, because the manipulation goes from here to here, was this 1 minute gap. When this gets inverted, I should have had a market order on this candle when it closed. And then so my risk to reward should have looked something like this down here. And that would have been a way sexier trade, 4 times what I'm risking. However, I didn't do that. I wasn't quick enough for that. Doesn't mean the trade is invalidated, it just means my entry risk to reward wise isn't going to be as nice. And in that case, if I'm taking on more points of risk, 50 points versus, call it 20 points or 28 points or whatever it was, if I'm risking more points of risk, then I'm going to size down less leverage on contracts. So I'll have 2 contracts versus 3 or 4. And I'll still be risking $200, but in this case, I'm risking $200 to make $400, when I could be risking $200 to make, call it $800, $900, maybe even $1,000, depending on how far I let runners go. But anyhow, the trade entry wasn't A+, because I should have taken this inversion. So this was a manipulation, this part right here. This was the inversion, it getting closed above. I should have entered right here. But I didn't. I wanted to get a sniper entry, and I wanted to see the 5 minute first get closed above. This was not needed for my model to play out. It's always good, especially if you have a stacked fair value gap right above your entry, to wait for confirmation, but we confirmed all the way up here. So at this point, I'm waiting because I want to be like as sure as I can be that the trade is going to play out. I want to take the highest probability trades. So what I wait for is I take the last manipulation leg, and I'm saying, okay, at what point will price pull back to give me another opportunity at entry? So I take the manipulation leg, we go from the low to the high, and we draw it out. 1 standard deviation is this level right here. 2 standard deviations in the move is here, 2.5 is here, and 4 is all the way up here. At 1 standard deviation, you see how the 2 to 2.5 is green? If you backtest this on the market, a lot of the time, if you get your manipulation leg correct, 2 to 2.5 standard deviations will be respected most of the time. 1 standard deviation, you might start to reject a little bit and get a pullback opportunity for a second entry. So keeping this in mind, if the overall target is to head towards my buy side liquidity on the 4-hour time frame, again, the far external buy side, it's like putting the pieces of the puzzle together. If I know the overall picture is that we're going to take this high, but I have these little granular pieces I'm putting together. If I know the overall goal is to take this high right here, and we're all the way down here, I know there's still more upside left. But in order for it to make sense, I need to make sure my risk makes sense, my entry makes sense. So what do? We hit 1 standard deviation, I can expect a pullback. Where are we going to pull back into? Probably discount of this leg that we made up. So I wait for discount, and I wait for the first presented fair value gap. The 5 minute has the first presented gap after flipping the 5 minute bearish. So if you have 2 overlaying displacement legs or displacement gaps or fair value gaps, whatever you want to call them, these overlaying gaps are referred to as the BPR or balanced price range. We have a BPR coming out of a 1-hour bullish fair value gap, coming out of a 1-hour SMT, coming out of a 4-hour SMT, targeting external highs, external buy side, retesting the initial gap that flipped the bearish gap. It's picture perfect. I just know I can't put on as much risk because I'm going to be risking more points of market movement. So I have 2 contracts sitting at this initial gap. I get tapped in right here. I'm risking 50 points to make 105 points. I get tapped in. At a 1-to-1 risk to reward, I always like to make it break even. So if my first swing high is sitting here, I'll make it break even at the first swing high. If this was at if the swing high ended somewhere like right here, and it wasn't quite the first standard deviation, I would just make it break even at either standard deviation 1, or I'd wait for these equal highs to get hit. So either way, when we come up here, I make it break even because it's 1 standard deviation and it aligns with the swing point. If this was lower for whatever reason and it wasn't quite a 1-to-1, I'd wait for this to get hit regardless around this point in time and make it break even. And I know my target's all the way up here. So I go break even, risk off at this point, and I wait for my target to get hit. Gets hit, picture perfect. It aligns with the 2 to 2.5, which aligns with my external buy side. Picture perfect trade. Couldn't have gone better. Well, actually, it could have. The only thing that could have gone better is my entry. But even though I got delayed entry, I managed my risk well. I knew the trade was still valid because the external draw was still intact. And I sized down. So everything was managed correctly. Made 400. Sure, it could have been an $800, $900 day. We'll take 420. So I'm happy with it. I stuck to my rules. I managed my risk well. It doesn't get better than that. So I hope you enjoy the trade review. I will do a more detailed strategy video in the future. I want to show you all an A++ example. For now, this is all I've done recently that, you know, I've taken other trades. I just haven't recorded them and done breakdowns. This is one of the better ones, but the reason it's not A++ is, again, I didn't take the initial flip. The initial flip would have been this 1 minute flipping because there's technically the last gap created on the manipulation that got invalidated. So this is a manipulation and then it got invalidated, therefore that should have been my entry down here. Instead I waited for the 5 minute, is what it is. But hopefully y'all learned something, took notes, found it interesting. And yeah, hopefully y'all have a blessed day, have a great day, be safe. I will catch y'all in the next one.